So thanks a lot everyone for joining for this yet another session on technical indicators. This is going to be the second session we will do. Post this, there will be another session where we will discuss breakouts. So just to recap, in the last session, we discussed moving averages and how to use moving averages to identify trends and how to use fundamentals to identify good companies at which are in the trend at decent valuation. So we can basically take positions in these companies and then ride the trend, right? So that was the idea. Now, whatever adds value to our filtering criteria, I think I go with this thesis that, if there is one more indicator that can at least improve my chances of making better decisions by even 1%, then I should go ahead and use those indicators, right? So with that thought process, I also started looking at the MACD indicator, which is the moving average convergence divergence indicator. Okay, so we in this session we will understand first to begin with the basics of MACD, which is the moving average convergence divergence line. Second, we will look at the components of MACD. So let me also start writing this here. Just a moment. The last session where we discussed moving averages, right? So in the last session, we discussed moving average indicator, and we talked about 20, 50, and 200 moving averages and how to use them to identify trends and then stay invested in the trend, right? And how to find a reversal, and then that's where you decide your exit, right? So with this, so having discussed all that, there's another indicator which I personally have found useful, and this is called the moving average convergence divergence indicator, called the MACD. And none of these indicators have to be used standalone. They always sort of are clubbed together. So for example, if you look at the whole techno-funda thesis, is that you start with the fundamental investing, which is how we started this course. So we always focus majority of our efforts on understanding the business and the industry, and then we add technicals to that. And technicals help us decide our entry and exit position. Now within technicals, we have different types of indicators. So we have moving average indicators. We have something called as moving average convergence divergence indicator. Then we have something called as the RSI indicator. And there's something also called as the Bollinger Band, right? So there are a lot of indicators to help us decide on this particular aspect. We've discussed moving averages to date. Today's session is all about moving average convergence divergence. And I think these two are good enough for us to take any call on your entry and exit position. These two, I don't find RSI as useful. Bollinger can still be of some use, but I think we are good with these two. So I will cover these two in the next session very briefly, but most of our discussion will be around the moving averages and the MACD, right? So we've already discussed MA, which is moving averages, and in this session we will do the moving average convergence divergence indicator. Now, what is this indicator? This indicator is nothing but it is a momentum indicator. Okay, so in simple terms, this indicator will tell you whether a stock is in the momentum or not. So as you can predict, a lot of people who do momentum investing, they use this indicator a lot, right? And the idea of using momentum indicators is that if your stock is in the trend, right, then buy, sort of sell early. So just stay in the trend, follow the trend, and just keep going up with the stock, right? So that's the idea of momentum. And this indicator tells us if a stock, first thing it will tell you is the stock in momentum. Is the stock price in momentum, right? That is the first question it will answer. And the second question that it also answers is the momentum slowing down or increasing, right? So it also tells you whether the momentum in whatever stock you are tracking or investing, is the momentum increasing or reducing, right? And it will help you decide whether you now need to start thinking about exit, or whether you have to keep increasing your position in the company. So these are two very important things that need to be understood. One, whether my stock is in the momentum or not, and second, if it is in the momentum, then whether the momentum is increasing or whether it is reducing. So both of these questions are answered by this MACD indicator, right? So what we will do now is, let's go to the charts and start looking at. So as usual, I'm going to trading view, and I will show you how to add the moving average convergence divergence indicator. So I already have that added, but I'll remove it for now and add it again. So I'm going to delete this. So as you can see, I have my price chart, and below that you can see the volume. But I also need to, and then I have these SMAs. So I have the 20, 50, and the 200 SMA, as you can see here. I also have the volume thing right here. And yeah, that's it. Very simple chart. Now I'm going to add, I go to the indicators tab here and add moving average convergence divergence, right? So this one shows up at the top here. As soon as I click, I can see this indicator. So this is my moving average convergence divergence indicator. I'm on the weekly chart. As soon as I go to monthly, so this chart will also change, depending upon the weekly view or the monthly view or the daily. Right? So as simple as that. Now let me go to the. Let me talk about what are the components of this indicator, right? So very simply, you can see three components here, right? The first is this blue line, and the second is this orange line, and the third is this histogram. Okay, so this line is called the moving average convergence divergence line. This blue line is the MACD line. This orange line is called the signal line. And I'll come to what these lines mean. And this third thing is called the histogram. Okay. So these are my three components of this MACD indicator that you're seeing here: the MACD line, the signal line, and the histogram line. Okay. Now let me get into each of these components individually. So let's first discuss, and I'm going to use this screen here as my writing board. So the first thing we will discuss here is the MACD line, which is the moving average convergence divergence line. And what this line is, basically, it is nothing but, so we have two, so just like we have SMAs, which is simple moving average, we also have EMA, which is exponential moving average, and it is nothing but lines like these only. So just like we have this 20, 50, and 200, similarly we have 20, 50, 200 EMAs as well. Depending on whatever you want to choose for your trading strategy. So what this MACD line means is that it is a difference of the 12 period EMA and the 26 period EMA. Okay. I say periods because, whether you are on the monthly chart or the weekly chart or the daily chart, the periods will change. So in this particular case, for example, the MACD line is a representation of the difference between the 26-month exponential moving average and the 12-month exponential moving average. So it's the difference. It's basically a subtraction of these two, right? So very simply, if I have this thing called the zero line. So what you're seeing here, this zero is my zero line. This line is called the zero line. And if my 12 period exponential moving average is greater than my 26 period exponential moving average, then the values are above the zero line, right? So then the MACD line starts going above the zero line, logical, right? And if my 12-month exponential moving average goes below my 26, then basically I am below the zero line. What it simply means is this. So just for example, for discussion's sake, let's assume that this is my, this is, I'll clear this. I'll clear all of this. Let's just assume that this thing is my 12-month exponential moving average, and this is my 26-month exponential moving average. So the difference between these two lines is a line called the MACD line, as simple as that. And whenever my 12 is above my 26, the line is above the zero. And whenever my 12 is below the 26, my line is below the zero. As simple as that, right? So that's the first component, which is the moving average convergence divergence line. The second, so as you can see, so let's stick with the MACD line for a while now. So the 12-month is obviously a shorter period EMA, and the 26-month is a longer period EMA. What it means is whenever your shorter period EMA crosses above your longer period EMA, so let's say this is my 12 and this is my 26. So whenever my 12 crosses the 26 starts going up, which means the stock is now getting into the trend, right? Which means the stock is now starting to go up, which is why the shorter moving average has crossed my longer moving average. And some people work with 26, some people work with 24. It's up to them. But what it means is that the stock is now getting into the trend. So when you start getting into the trend, then basically your difference between the 12 and the 26 starts to go up. So when it starts to go up, which means it becomes positive, then the MACD line starts going above the zero. And when it starts to go negative, then the MACD line starts to go below the zero. So for example, as you can see here, the blue line, which is my MACD line, was during this time above the zero, then it went below the zero, and then it came again above the zero. So as you can see here, when the stock started going up, the MACD line also started going up. And then when the stock was coming down, the MACD line was also coming down, right? It's nothing but a sign of uptrend or downtrend. So as you can see in the downtrend, this is my downtrend, the moving average convergence divergence line is starting to go down and then get into the negative zone. So when you get into the negative zone, beyond this point, it means that my 12 EMA is below my 26 EMA, right? And when it starts to go up here, which means the stock is getting into the trend back again, which means my 12 EMA is above my 26 EMA. So hope you're able. It's all about these two lines, these two moving averages. The difference between these two moving averages is called the moving average convergence divergence line. So the MACD line is nothing but a difference of two moving averages, as simple as that. So in the first session, we discussed moving averages, and in this session, we are discussing the difference of moving averages, right? So it's almost like a differential. It's like a one level, an indicator that is a level on top of your moving averages, because at the base is we have the moving averages. So the difference between those two moving averages is called the moving average convergence divergence line. Whenever this line goes above the zero, it means the stock is getting into the trend. Whenever it goes below the zero, which means the stock is in a downtrend. Okay, so I hope these two lines are clear. These 2 points are clear now. So the MACD line above the zero is a sign of an uptrend, and that tells me the momentum also. So when the momentum is high, the line just keeps going up, and when the momentum is low, the line just keeps going down below the zero. Now, Now there is the second line, which is called the signal line. So this orange thing is called the signal line. And what this signal line means, now this is another level of complication on top of the MACD. This signal line itself is a 9-period EMA of the MACD line. So your blue line is the moving average convergence divergence line. And this signal line is the 9-period EMA of the moving average convergence divergence line. Right? So we started with moving averages, and the difference of these two moving averages is the convergence divergence line and the 9-period, 9 month, 9 weeks, 9 days EMA of the MACD line is your signal line. So look, here these moving averages are the moving average of the price. In a way, the signal line is a moving average of the MACD line, right? So that is the way to think about it. Signal line itself is a moving average, but not of the stock price. It's actually a moving average of the MACD line itself, right? So it's another layer of complication on top of the MACD line. It's not really complicated, but it's an indicator. It's a value that we are calculating, which is another differential on top of your MACD line. So moving averages, MACD, and then the signal, right? So hope you are understanding how we are going about calculating these lines. So now, what does that mean essentially? So the signal line, just like moving averages tells you whether the price is in trend or not, the signal line here is telling you whether the moving average convergence divergence line is in trend or not, right? That is what we need to understand here. So like I said, when I started this session, we will discuss two things here. One, we will discuss whether the stock is in momentum or not. That is my first question. Second question is whether this momentum is increasing or decreasing. Because this is very important for me if I have to add more or reduce my position, right? If the momentum starts to decrease, then I have to think about reducing my position. If the momentum starts to increase, then I have to increase my position, right? So for these two things, it is very important. So if you think logically, the MACD line itself answers this first question, whether the stock is in momentum or not. That can purely be told by the MACD line itself. But whether that momentum is increasing or reducing is indicated by the signal line. And this and the second question is basically answered by the signal, right? Because the signal line is a moving average of the MACD line, and it tells you how how fastly your MACD line is moving, right? So basically it tells you the momentum of the MACD line itself, and hence it tells you the momentum of the momentum itself, and that is an indicator of whether the momentum is slowing or reducing. So I hope this is easy to understand. Any questions here? Happy to answer. So that's my MACD line and the signal line. It's nothing but simple moving averages that we're doing here. So now let's come to the third component, which is the histograms that you're seeing here. So this histogram is nothing but the difference between the MACD and the convergence. Okay. So this difference here between the blue line and the orange line is the size of my histogram. Okay. So these small histogram bars that you're seeing here, it is basically nothing but the difference in the MACD line minus the signal line, right? So whenever you see that your MACD crosses above the orange, the histograms becomes positive. And when you see that the blue line moves below the orange, the histograms becomes negative, which is below zero line and above zero line, right? So obviously, one can see that when the distance between the MACD and the signal line keeps increasing, the stock is in trend and the histogram is above the zero. And when your MACD line goes below the signal line, the histogram is below the zero. Now this histogram is also telling you something else. As you can see here, the histogram has slightly dark and thin colors. Even within green, some bars are dark green and some bars are light green. So what it tells me is that, so for example, I'll just make it, I'll go to this chart called Weber Global. Just give me a moment. So here it's very clear. So let me talk about this. So as you can see here, that on the monthly chart, my my moving average MACD line is above my signal line, and the difference just keeps increasing, right? So you can see that the difference just keeps increasing all through this while. So what it means is that the momentum is increasing, and this is indicated by a thicker green color, right? So the green colors will be thick, whereas from this point onwards, the thickness starts to reduce, and that is represented by a green. So this is still green because my MACD is above my signal, so it's still green, but the thickness starts to, but the green color fades away because the trend is changing. So the difference is now starting to reduce, and when it starts to fall, as you can see, the difference keeps increasing. So as long as the difference keeps getting increasing and the histograms bars keep getting bigger and bigger, so you will see that the color is dark. But then as consolidation happens, as you can see, the stock was in downtrend here, and then consolidation happens. So once the downfall starts to reduce and the selling pressure comes to reduces, then the bars also start reducing in size as well as color. So two things happening here: the size of the bar is reducing, and the color is also thinning on the downtrend side. Whereas on the uptrend side, what you're seeing is that the the stock is in uptrend, and the bars are getting bigger and bigger, and the color is also thicker, which is it's a dark green color. So when you see these things, when you see something like this, bigger and bigger bars with thicker color, it means the stock is in uptrend, right? This is a sure sign of momentum and upward momentum in the stock, and this is where you need to start buying. So early in the cycle, as you can see, once your once your MACD line starts to go above your yellow line, which is the signal line, it is a sign for you to start buying the stock. And what happens is that the crossover happens. So this is the MACD crossover, right? I will come to the uses of the MACD in some time, but we were discussing the components, and we discussed the MACD line, the signal line, and the histogram. And to conclude the histogram, what the histogram says, what the histogram is basically the difference between the MACD and the signal. And the bigger the trend, the bigger the histogram bars, and the thicker the color, right? And once the trend starts to change and go in the opposite direction, you will see that the bar size starts to reduce, and it will then start getting below zero, and then the color also changes from green to red. Initially, when the downtrend or the selling is aggressive and the stock is in the downtrend, then the bars will be bigger and bigger, and again this will be dark red in color. And once the selling pressure reduces, then the bars starts getting smaller and smaller, and the color also thins away, right? So that's essentially what the histograms are. Now let's come to the uses of histogram and the uses of how to go about using the MACD. Okay, so till date, what we've covered is we've talked about what till now what we've covered is we've talked about what is MACD and what are the components of MACD. So hope we are clear till this point of time. Any questions here? Happy to take, and then we will talk about the how to use this MACD line. Okay. Since there are no questions, we will go ahead. Right. Uh, so what you're seeing, let's start with how to start using these histogram charts to tell us whether we are in an uptrend or a downtrend. Right. So as I said, that if your histogram bars are getting bigger and bigger, right? So mark my words, if the histograms are becoming bigger and bigger, and it's in an upward slope. So the slope is upwards. It means that the stock is in uptrend, which means this is a sign of growing momentum. So the momentum is increasing. Okay. First of all, it is in the momentum. So point to be noted, if your MACD line is above the zero, then it is obviously in the momentum, but the momentum is growing. It is not reducing, right? So till this point of time, exactly at this level, you see exactly till this level, the momentum is on. The momentum is increasing, right? And from this point onwards, as you see, the bars start getting smaller and smaller. The color moves from thick green to thin green. And as you can see, the stock starts to go into a downtrend, right? And so the histogram, the first use of the histogram is the color and the size of the bars will tell you the momentum. First, whether it is in the momentum, and second, whether the momentum is getting stronger or whether the momentum is weaker. So as you can see here, the momentum starts to become weaker from here onwards. The buying momentum starts to get weaker. Now, as you can see here, the selling momentum has started to become weaker, right? So for the last whatever period, something like, somewhere between after 2022, the selling momentum started to reduce and the bars have now, become very small. So now the selling momentum is not as much. The stock is basically consolidating over this period, right? So that is one thing. So that is the one use of the MACD line. The histogram tells you the momentum and the strength of the momentum. So obviously here the buying strength is very high. Here the selling strength is very high. Here the buying strength is low. Here the selling strength is low. Okay. And you can look at multiple charts to see where the buying and the selling strength is high and how does that correlate with the stock price itself. So with the buying strength is high and you can see the stock price is going up, the buying strength reduces. So you see the stock starts topping out, and then the selling strength increases, which is when you see the majority of the fall happens in the stock. And then over the last few months, the selling pressure has also reduced and the stock has started to consolidate within a given range, right? So this is like a momentum indicator. It is telling you when the momentum is high, when the momentum is less, when the selling pressure is high, when the buying pressure is high, and all of these things, right? Now let's look at the second use of the MACD indicator. So as you can see very clearly, in fact, if in the previous session, we talked about moving averages and we talked about moving average crossover. So when we talked about crossovers, we talked about the golden crossover and the death crossover. What did we say there? We said that if the 50 moving average goes above the 200 moving average, so this is 50 and this is 200. So this is called my golden crossover, which means the stock is getting into the trend. And the death cross similarly was when my 50 starts to go below the 200. So let's say this is 200, this is 50. It starts to go below, which means the stock is getting into the downtrend. So this is my death crossover. Now, let's look at the crossovers in this chart. Okay, so as you can see here, this is my crossover here. This is 2050. Nonetheless, it's a crossover. And then this is 2050, and this is an uptrend crossover, and this is a downtrend crossover. Okay. So let's now, having looked at these moving average crossovers, there is another crossover that I want to point about, and that is the crossover between the MACD line and the signal line. Right? So this is my MACD, this is my signal, and this is the crossover. So as you can see here, very clearly, the stock was in a downtrend, right? So over the last, I think right after 2021 peak, September peak, the COVID peak, this was the COVID peak, the stock started to correct. Now, if you were to take your trades basis the crossover and depend upon your moving averages, then 370 is the price at which you are deciding to now sell the stock, because the 50-month moving average is now going below the 200. So the monthly crossover is happening, in fact, after 1.5 years of the downtrend, the start of the downtrend. Whereas if you look at the MACD and the signal line crossover, it's a much earlier indicator of a downtrend. That's my simple point that I wanted to get to. So this crossover, in fact, pardon, I'm not able to draw a straight line, but mota, this is where it starts to tell me that the stock is getting into a downtrend. And hence, this is time for us to exit. So something like 650 odd or so, I could have taken a call that Weber Global is now getting into a downtrend because the MACD line is starting to go below the signal line. And hence the trend is reversing, and hence I need to exit from Weber Global, right? So this is my exit signal, which comes much ahead of my moving average crossovers. So coming to the second use is that the MACD crossover is a much earlier indicator of uptrend or downtrend. And your moving averages is a much slower indicator. So, if you have to figure out in the moving averages, it will take a lot of time. But if you follow the MACD crossover it will tell you much ahead of time. Not ahead of time, but it's a much better indicator versus your moving averages when it comes to figuring out crossovers and starting of the uptrend and the starting of the downtrend. Okay. Now I want to point, since we are discussing uptrends and downtrends, I also want to talk about the crossover that happened on the buying side, right? So if you look at what happened on the buying side, let me just magnify this a little bit, right? So what you're seeing here is that my buying crossover, which means the moving average crossover, happened at this point of time, right? And from here, but the MACD crossover is not clear until this point of time, right? So, and as you can see, the stock did not show a significant movement during this period, right? So during this period, the stock was more or less in this range only. And while your moving average indicator did tell you that the stock is now getting into the uptrend, the MACD indicator did not give a very clear indication until this point, until 2020, after which the stock started giving a very serious movement in the upward direction, right? So essentially what it helps you with is it will help you figure out when you need to start going big on the stock, both from a buying point of view, and when you need to exit the stock from a selling point of view, and it helps you optimize for your entry and exit. So you would have saved for this time period, right? Moving averages either tell you much earlier about the entry, or they are much later as far as the selling is concerned. Whereas the MACD is much more precise in terms of your buying and your selling time. So you optimize for your entry and exit. And we've discussed this. We like this company. We are purely looking at indicators and technicals so that we can optimize our entry and exit. That's it. I mean, I am not, when I sell Web of Global, it's not that I am now bearish on Web of Global and I've stopped liking the business. It's just that, I don't see much more movement in the price and the valuation. And hence, this is time for me to make some money and cash out some money out of this company. So that's the Mota thesis. This helps you optimize. Is a much better indicator versus your moving averages. In fact, moving averages plus your MACD together gives you much more comfort when you're taking a technical position, right? So what you can do as part of your strategy is once you see a crossover on the moving averages, you can start taking some sort of tracking position, right? And we've discussed position sizing, and we'll keep discussing position sizing all through our sessions. So it's not that when you decide to buy a company, you put all the money in one go, right? So this is where you will start tracking the company, and you will take a small tracking position. So let's say you want to invest 1 lakh in the stock, you try with 10,000. So this is where you make an entry with 10,000 rupees. And then, when it starts going up and the momentum starts picking, then you start putting more and more. So you add putting more of 10K, another 10K, another 10K, until you get to the point when the MACD indicator gives a very clear crossover and tells you that now the stock is getting into a uptrend, and the strength of the uptrend is increasing. The bars are increasing. So please buy all this way through till the top, until the buying reduces, until the buying intensity reduces, and the stock then starts to consolidate and then move down. And this is where you get your sign to, and this is, sorry, just a moment, and this is where you get your sign to somewhere here. Somewhere here, this is where you get your sign to sell the company, somewhere here. So that's how you trade. You start building your position all the way from here, slowly. You load the stock here, and then you ride the uptrend, and then you exit here, right? That is how MACD helps you time your entry and your exit in fundamentally good companies at fundamentally very good valuations. And like we've discussed again and again, at this point of time, fundamentally also the stock will start to look very expensive. So for example, Web of Global at this point of time had reached a price to earnings ratio of almost 65 to 70, I think, somewhere in this range, which is very expensive for Web of Global. So all of these things will come together, and do not ever take a decision just basis moving averages or MACD or any indicator for that matter. Never ever take your decision using just moving averages. Okay. Now, since we are talking about uptrends and downtrends, I also want to show you some examples which I thought were very interesting when I figured out. So let's talk cyclical businesses, because cyclical businesses go up and down. They are not multi-baggers. So in cyclical businesses, it is very important to figure out your entry point and your exit point. So let's go to Tata Steel and see if we can use moving average convergence divergence indicator to figure out our entry and exit position. Okay. So I'm on the monthly chart right now. I'm looking at the long-term trend. And, Jeevan sir, are you there?
Yeah.
So, if you followed what I said till now, I would request that, we do this together. So as you can see, Tata Steel here, right? This is the moving average convergence divergence line. And as you can see here, so my crossovers are my point for entry and exit. Okay. So as you can see here, I will point some crossovers. Okay. So let me show the crossovers very clearly. Just a moment, and then we can see if we are able to figure out. So look at this crossover here. One, this crossover here. So I'll start with 2008 onwards. 1, 2, 3, 4, 5, 6, 7, 8. Just a moment. Sorry, this moved slightly. Okay, I'll clear this. I'll clear this. I'll do it again. So this thing here, 1, 2, 3, 4, 5, 6, 7. All these points that you see, these are crossovers. This is a bearish crossover. This is a bullish crossover. Now, if you were to time these crossovers, you will see that you can make money in TCS, in Tata Steel. So, for example, this crossover is somewhere around here, right? And you could have bought Tata Steel at this level and held all the way till this level, somewhere around this level. So, and you could have sold Tata Steel here, bought here. This is your selling. So this is a bearish crossover. The MACD line is going below the signal line. So very clear signal to exit. This is exactly matching the top, as you can see. And then this is also almost closer to the bottom. This again here, it's not very clear, but this is again at the top. This again here is at the top, somewhere at the close to the top. So as you can see here with a cyclical stock, because cyclical stocks go nowhere. They just go up and down and up and down and up and down. So if you can manage to identify these cycles on a monthly chart, if you can follow the MACD and then decide on your entry and exit, you can do the cyclical play very well. Look at what happened here. The stock has been correcting after the COVID peak. Let me just magnify this slightly. So as you can see, the stock has been correcting post the COVID peak, but this was your indication to sell. And now the stock is in a downtrend, right? So now the downtrend in Tata Steel has started. Again, this is not a buy or a sell suggestion. Please act as per your own understanding and the advice of your advisor. But for educational purpose, what I'm trying to tell here is that because the MACD indicator has gone below my signal line, the stock is now in the downtrend, very clear downtrend, and it may go all the way down to 31, 40 rupees. Why not? I mean, time will tell, but basically the downtrend had started and it makes sense to exit if you're still holding Tata Steel in your portfolio, right? And MACD can help you figure out your buying and selling. Now I'm going to go back to another cyclical company called Vedanta Limited, and let's figure if we can identify the buying and selling points. So as you can see here very clearly, this is my buying point. This is my buying, where the MACD starts to go up above the signal line, and this exactly matches, not exactly, but slightly above my exact bottom. This is my buying price, and this is where I sell. So this is where I sell it. Sorry, this is where I sell. Because my MACD has gone below so this journey, and all the way, how much can you make here? Let's see. All the way from all the way from here to here, we are looking at 500% returns by following MACD. That's so you can time your cycles in the best possible way if you follow the moving average convergence divergence line, basically, as simple as that, right? And fundamentally also it will align with what is happening in the economy and the markets and the supply chain and all of that, right? So if you have to build conviction around buying Vedanta or Tata Steel or any commodity company for that matter, then fundamental plus technical plus MACD is the perfect way to build conviction. And then you can go all in. You can actually put in 5 lakhs, 10 lakhs, 15 lakhs, 20 lakhs in a single position make 2x, 3x, 4x in that position, and then find your exit. And if you can master this process, right, and you will only be able to master this process if you look at more and more charts. So look at what happened here. This was the exact top. This was the exact peak, and this was the peak. So we were very close to the peak, and this gave us an indication to sell. Then it gave an indication to buy, and then again sell here. Sorry, buy here and sell here. So, I mean, I can show 100 charts. This follows everywhere. Okay. So this is
Joel, one question actually.
Yeah.
See, I have seen. See, there are the way which we follow. It's two things. One, you buy a stock, and anyway that is going greater. I mean, that is going to go up, and then you forget it. Probably 2 year, 3 year, 10 year, and then at a stage, sometime it may return accumulative, probably more than 14-15%, or you look, all the fundamentals, you look the technical, and then identify the ups and downs, probably 1 month, 2 month cycle time, and then do it. So which one you prefer?
So I prefer this way. So earlier I was to do the older way that you mentioned, right?
Okay.
Because I didn't have this idea about technicals. And I used to follow valuation. Now, valuation is done via what is happening in the economy, the macro, and the valuation at which the company is at.
Okay.
Now, you can't exactly figure out the bottom. It is very difficult to say whether a stock that you bought will stay undervalued for 2 years, 3 years, 5 years. You don't know, right? You think there is some thesis to it, and there might actually be a thesis to it, but then that thesis may take a lot of time to pan out, right? So this is me just optimizing for my time and my investment. That's it. If I can time it slightly better using technicals, that is what I'm trying to do. Of course, my companies are fundamentally very good. So I will always trade or invest in the best of quality companies. I will never compromise on promoter and all of that. But then this just helps me time it better. So, and especially in cyclical companies or even in HDFCs and blue chips, it will help us identify my entry and my exit point. Or let's say, even if you don't want to exit, then at least it will tell you what are your entry points, so that every time the stock is giving you an opportunity to enter, then you should go lump sum and put in a larger amount and just keep increasing your position in it, right? So that's the short question. I am starting to do the second one in my personal portfolio and some client portfolios where we do techno funda, because we never know how long we have to wait, and we are in the capital building phase right now. My clients, they start with 10 lakhs, 15 lakhs, 20 lakhs capital. So majority of my clients are looking to build wealth. They're looking to get to their first 1 CR, 2 CR, 3 CR, and before saying that, what, now let me just park it in, say, fundamentally good companies, and let's just, keep earning dividends out of this. And they are then more concerned about capital preservation versus capital growth. But at this point of time in my portfolio and a lot of my clients' portfolio, we are focused on capital growth, not on the dividend part. And obviously, it is happening in a way that we are dealing with very good companies. So, but even in very good companies, you see significant drawdown, and we are trying to avoid those drawdowns. We're trying to avoid getting stuck in a company for 5 months, 6 months, 1 year without making any returns, right? So that's the idea. Any questions, sir?
No, I mean, in fact, I'm still in a learning phase, but
Yeah,
these things, if you see, you said a correct word, right? If you can market, I mean, time the market, right? That is, that's a big condition supply one, but yeah. Now, what I'm suggesting is probably we can connect, or maybe after this session, we can connect and then look for some 3 or 4 where now it is in an upper phase, right? Where, and then we have a tentative timeline, maybe 2 months, 3 months.
yeah.
And we can start it probably with a small amount and we will see it. And based on that, as the way you said, we can increase the corpus.
Yeah, definitely. Very happy to do that discussion after this, because there are some opportunities that we're already seeing, and so majority of my clients have already bought into that. So obviously we can discuss those ideas and see if we can also bring you into those companies. Yeah. And speaking about, so we discussed cyclical businesses. Now let's look at some blue chips, and let look at how. Oh, sorry. Let's look at companies like HDFC Bank and see if we can figure out our entry positions here. So, when we did this discussion around moving averages, I did tell you that always buy when the stock is trading support, taking support. So, we are on the monthly chart of HDFC Bank. As simple as that. These are my buying points. This, 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 this. These are my points to put more and more money in HDFC Bank, assuming that I want to build 15, 20, 30 years, I want to stay invested in this company, right? So I don't want to exit. I just want to keep adding, but then I want to optimize for my entry. So these are your buying points. Now let us look at how the MACD, indicator tells us. What is the MACD indicator telling us? So the MACD indicator, there is something called as pullback. When a stock is in the trend, when something is in the trend, then after some point of time, there is a pullback. So what you're seeing here is a pullback. What you're seeing here is a pullback. This is a pullback. This is a pullback. This is a pullback, right? So there is some, every 20, 25, 30% or whatever the rise is, after that, there is some pullback. So what happens in that pullback is that the MACD line, it comes closer to the zero level, right? And I can show this to you much more clearer in a weekly chart. So let's say I go to the weekly chart right now. I'll clear this all. Just a moment. I'll clear everything. So now let's look at the MACD indicator and the weekly chart, right? Let's look at the points of pullback. So as you can see here, this is my point of pullback. Okay. And what happened to the MACD indicator? The MACD indicator went into the negative zone, and then it did a crossover and started going up. Okay. So these crossovers are my points to buy. This is my point to buy. These crossovers. So, and here again, there was a pullback. So the stock has been in the trend, but there was this pullback because of which the MACD indicator came down below the zero again, and then there was this crossover again. So, if you have to figure out this crossover here, this is again your points to buy, right? Ultimately, it will basically go along with what we discussed in the previous session, where we said every time the stock takes support at the 50 or the 200, please buy more and more at those points of time. And what you will eventually see, and how it will also correlate with the MACD, is that the MACD will be doing a crossover again. So it will be below the zero. It will be doing a crossover, and so that this is a very strong support zone. Okay, this is a very strong support zone, because होता क्या है, वो support zone से reverse हो जाता है. So support पे आके stock reverse होता है. Once it starts reversing, the MACD indicator also gives a crossover, and that's your point to buy. So basically, the stock is taking support at a support level, and then simultaneously there is a MACD crossover, and boom, that's your point to buy. That's where you buy, right? And you could say that this is your point. So if you are a trader or a short-term investor, or a swing guy, somebody who's trying to time the market, this is your time to sell. See, this is your time to sell. And always look at the weekly and the monthly, because the weekly and monthly give you much better indication of the trend. If you go into the daily chart, there'll be a lot of false crossovers as well, right? Which are not necessarily helpful. So avoid those false crossovers. Look at the weekly and the monthly, and it'll give you much better picture of the trend and your entry and your buying points. So this is what happens. Even though for a fact that HDFC Bank has been in an uptrend on a monthly chart for almost all its lifetime, but there are these pullbacks. This is called a pullback, and these pullbacks give you an opportunity to buy, but then only buy after there is a crossover. So you say this is the pullback. but then I will not buy until there is a crossover. See, this is the pullback, but I will not buy until there is a crossover. So let me put it very clearly here. So in a stock which is uptrend, in an uptrend, and then there is a pullback. A pullback means the MACD goes below the zero line, or it touches the zero line. Once it touches that, then you wait for a crossover. If the crossover happens, that is when you buy. So when all of these three things come together, then you buy, right? And what will also be happening is that the stock would be taking some sort of support on the moving average. Now, let us try this out in a company. For example, I want to look at company called Divi's Laboratories, right? So Divi's corrected significantly. The price to earnings came down to 30, as low as 30. Let's see if we can figure out whether this was a good time to buy Divi's, right? So if I go to the weekly chart, I can for sure see that the stock has been an uptrend, right? So the stock has been in an uptrend, no doubt about that. No doubt about the fact that the stock has been an uptrend for a very long period of time. Now this is a pullback, and this is a pullback. This is the more recent pullback, and I'm more interested in the more recent pullback. Again, not a buy sell call, but if you look at what is happening here, so let's revisit the condition that we mentioned. So we are looking for a stock that is in the uptrend, and then it is in a pullback. There's a pullback happens in the stock, which is nothing but a valuation correction. This will simultaneously be, corroborated with the fact that there will be some deterioration in the fundamentals and the margins also. So the pullback will come because of some deterioration in the either the margin profile or the growth of the business or whatever. And that pullback, because of that pullback, you will see that the blue line, which is my MACD indicator, it will go below the zero line. So it has gone below the zero line here, as you can see here. And then you see there is a crossover here, but this crossover is not very clear. It's a false crossover because it comes down again. And then you have a crossover again. So which is why when something like this happens, then please move to the bigger horizon, which is the monthly chart. Okay. So let's look at the monthly chart. So in the monthly chart, what you can see here, there is a pullback. Because of this pullback, the MACD line has come down below the zero line. So obviously the one thing, the requirement that MACD, just a moment, the requirement that MACD comes below the zero line is satisfied. That requirement is satisfied, but I am yet to see a crossover because my MACD has still not crossed the signal line. So I'm yet to see a crossover. It does, what it is telling me here is that the selling intensity for sure has come down, because now I can now see smaller histograms and the color has also faded away. The red color has become thin red color. And so it is telling me that the selling pressure has come down. It is also telling me that the moving average convergence divergence line is below my zero. And then as soon as it gives me a crossover, that is my buying price. And let me also add another angle to this. You can see that the stock has given a breakout. As you can see here, that the stock has given a break. So this is a breakout. So if a breakout can also be added, then the deal becomes even more, then the conviction becomes even more high, right? Plus fundamentally, the stock is at a all-time low PE of, I think, 33 odd or so, right? So can't be a better trade. That all the indicators very clearly telling me that this is a good price to accumulate Divi's Laboratories at this point of time. But the last requirement is yet to be met, and that is a crossover. The MACD crossover is yet to happen. So I am not going to take, I might take a tracking position in this company, but I'm not going to load big time on this because my MACD crossover is yet to happen. It has already happened in the smaller time horizon, which is the weekly chart, right? In the weekly chart, there is a very clear breakout. There is a crossover as well. But then sometimes, as you can see here, the crossovers are slightly confusing. But that clarity you will get in the monthly chart. The monthly chart, the crossover will not be confusing. It will be a very clear indication of an uptrend or a downtrend. All I can say at this point of time about Divi's Laboratories is that the selling pressure has come down and now the stock is consolidating. And because of this breakout, I can, with a lot of confidence, say that the stock will now start to go up, not in a big way, because I'm yet to see a MACD crossover, but maybe dhire dhire it will start to go up. So I can start taking a tracking position here. I will start to take a tracking position. This is not a buy sell call. Please don't invest on my advice. But this is how we think about taking tracking positions. And when it gives me a very clear crossover at some point of time, 1 month down the line, then I am going to load up big time on this stock.
Ujjwal, one question, right?
Yeah.
See, now I understand that there is an uptrending, then the pullback started, then the only thing, and even a breakout, right?
Yeah.
But how confidently we can say that okay, there will not be another pullback? It can, right?
See, okay, there can be another pullback, but so when I say that there's already a pullback, the stock is already taking support at the monthly, right? So
Correct.
so let's look at what is giving comfort, and I'm going to, because we are now looking at DVs, so I'm going to go to screener, and I'm also looking at the fundamentals of DVs right now. And I'll show you what is happening on the price to earnings side, which is a fundamental indicator of valuation. So as you can see, the stock price corrected all the way from 70 price to earnings, came down to 30, right? And very recently what happened is that the company delivered a very good quarter. So as you can see, the revenues went all the way from 1700 to 1900, margin increased from 24 to 25, and there was a quarter-on-quarter increase in PAT, quarter-on-quarter increase in revenues, and the margins also. So what this is telling me is that maybe the margins have bottomed out. So this has bottomed out, which means the slowdown has stopped, even in the business fundamentals. There has been a fair bit of correction in terms of the PE ratio. Okay. Now, can this be followed by another pullback? Definitely. If let's say the June quarter numbers are very bad, then obviously the stock will again start correcting. But as a long-term investor who's looking at DVs, am I comfortable starting to buy this stock now? Yes. Is this in the overbought zone? This is not in the overbought zone, right? So the bigger question is this company undervalued or overvalued, right?
Correct. I was about to ask the same question.
Is this company undervalued or overvalued? I can say for sure that it is not overvalued. This is not trading at a PE of 70 right now. This is trading at a PE of, I think it went back to the average of 45 or so. Just look at the current PE of the stock is 51 odd or so. There has been a strong pull up also. I will start to take some sort of initial tracking position in this company. What I'm also seeing is that there is a resistance at the green. So it's not that the company will, it's going to start going, it's going to get it. It's not yet in an uptrend, right? So it is consolidating. There has been some improvement in the financial performance of the company, because of which we saw some improvement in the stock performance over the last 1 month or so. The stocks does seem to have bottomed out here. It has taken support, both in terms of and in terms of moving average also it is taking support. So see, as a long-term investor, I cannot be very accurate, but I can be more or less right. And that is what I'm trying to do. I'm trying to be more or less right. I don't want to be accurately right. So if I do want to buy DVs, then this is a good price for me to buy some quantity of DVs right now. I'm not saying if I have 100 rupees, I'll put all my 100 rupees in one go. Like I said, my MACD indicator is yet to give me a sign of a very clear uptrend. So, but the pullback has happened, and because the pullback has happened, the valuation is corrected. And once the MACD indicator gives me a crossover, then I can very confidently put more money. That's the thought. And I think you can do this in in multiple other companies where we have seen a decent amount of pullback. So let's look at Aarti Drugs and a lot of chemical companies that went up during COVID and have corrected significantly since then. But let's look at Aarti Drugs right now. So as you can see in Aarti Drugs, this was after the bull run that we saw in COVID, after the stock went anywhere from 140 rupees to 900 odd rupees. This was your point to exit. This was your point to exit. Now, did I know at that point of time that we should exit? No. In fact, these are very difficult things to time for a fundamental investor. But if you then start to look at the technical, then very clear indicator that the stock is now getting into a downtrend. Suppose that we did see so much correction in the stock, and now there's been a decent pullback. So the MACD has come down below the zero line, and I see early signs of the MACD now reversing, and at some point of time it will go like this. It will go above my signal line, and then if something like this happens, then I know that the stock reversal has happened, and I can then go buy more and ride the uptrend again. So that's the point. And this you can go through and look at the charts of multiple other companies that have gone through significant correction over the last 1.5 years. You will find that in all of these charts you will find the same trend. Look at good companies. Look at Deepak Nitrite. What happened? I think Deepak Nitrite gave a breakout last week. Look at Deepak Nitrite, right? So Deepak Nitrite, yeah, this is a very good case because here it's slightly different. Let's discuss this case, because what I do see here is there has been a pullback, and the pullback, is there more scope for pullback? Definitely, because this can come down and touch the zero line again. See, pullback doesn't mean that it will definitely go below the zero line. Pullback means that it will come down close to the zero line. It may go down the zero line. It may reverse from here only. But the crossover hasn't happened yet. On a monthly chart, my crossover hasn't happened. So if this gives me a crossover like this, where my MACD line starts to go above my signal line, and then simultaneously the histogram will start to go up, that's my buying point. That's my buying point. And that will also be along with that, there will also be a breakout in the stock. So the breakout is yet to happen. As you can see, it is still taking resistance at the red line. So it will be simultaneously followed by a breakout. So all of these things go together. I mean, if all of these things go together, that is your very clear indication to buy more or put more money in the company, and then ride the trend. And I'm not saying you will be right 10 out of 10. Maybe you will be right 7 out of 10 times. You will still make mistakes 3 times, 30% of the time, in which case you have to accept your mistakes and move on in life, right? So, but if you still make about 60%, 70% right, you'll still make good money in stocks and investing generally, right? So that's the thought process. Now, I want to talk about a very important concept, and this is the last concept. In fact, this is also the most important concept here. That because we're talking about momentum and the strength of the momentum, we have to talk about divergence. In fact, MACD is known as convergence. I mean, there is a word called convergence divergence. We've not discussed convergence divergence till date, till now. So let's discuss this, and I want to talk about 2 very clear examples. Let me go back to this company called Titagarh Wagons. Just a moment. And this is the last concept that we'll discuss today. Let me go back to Titagarh Wagons.
Ujjwal, but before going to that, what is your summary on that, Deepak Nitrite then?
So Deepak Nitrite, yet a breakout is yet to happen, right? Yeah. I can't see a breakout. Correct. The breakout will be clear when this crosses the red line very conclusively. Okay. So on monthly that hasn't happened. The crossover in the MACD hasn't happened yet. Although I do see some sort of easing off in the selling. So the selling is not happening because I see the histogram bars getting smaller and smaller. Right? So the selling has come down definitely. and there is consolidation phase right now, but it's not yet a sign for me to go full on the Deepak Mentorship.
Okay, great.
Yeah.
No, I'm just thinking whether my understanding is correct. Okay, great.
Yeah. So we'll wait. We'll
Okay.
wait in Deepak Mentorship.
Sure.
Yeah. So let me take an example where there is a breakout, because let's talk about breakouts also. So let me talk about this company called Lumax, where we've also invested. Again, not a buy sell advice here, but I'm in the monthly chart right now, and we were tracking this company for a very long period of time, and there were multiple breakouts here. So this is your breakout. So this is your breakout here. Yeah. So what happened was that on the monthly chart, there was a pullback. So as you can see, this is a very clear pullback. The MACD line came down below the zero. So this came down below the zero. And then at some point of time, as it bottomed out, somewhere very close to the bottom, it gave a very clear crossover on the monthly chart. Now, once you have the crossover, this is your point to entry. So if you had made an entry at somewhere this level, then you basically can enjoy this journey. And because this has still not given me a sign to exit, because I will exit when this comes down and this is like this, and there is a very clear sign of my MACD line going below my signal line. So this is my time to exit, but it has not yet given me an exit signal. So I'm still invested in Lumax Technologies. We have made a lot of money investing in this company. It almost seems criminal that you can make so much money, almost 500% returns in a matter of April 2020 to March 2023, in a period of 3 years. So is it long-term investing? It's definitely long-term investing. We are not talking short-term trades here, but in 3 years we managed to make 500% returns. That's what we've been able to achieve by simply following this strategy, studying the fundamentals, studying the technicals, looking at your moving averages, looking at your MACD, and then conclusively taking a position here with a lot of conviction, and then riding this trend all through. Right? Can we discuss some more ideas where we are now currently seeing some traction? So let me look at Tata Motors, for example. Again,
Ujjwal, one suggestion is actually, see, now we take some sort of a stocks which probably gone through that. But do you think, or probably take some 2 or 3, probably which is not a high value item, which is in the current where even the crossover function works, the pullback just completed. So do you have something like that in mind?
Yeah. So look at Tata Motors, right? Tata Motors, as you can see, this was your buying point. Can you see this buying point?
Yeah. But that is somewhere in 2020, right?
Yeah. So whenever it gives you that signal, you buy it.
Oh, okay.
And then you ride all the way till this point, and this gave you a sign to exit. So you exited also. And then, in my view, this is now again crossing over. Okay. So I do think that this is crossing over right now. We are bullish on Tata Motors. We have already positioned in this company. We are already sitting at anywhere from 10 to 15% returns across all our clients. So yeah, I mean, this is where I think we will definitely see a crossover. Now let's see how it goes through. Two things can happen. Either it will very conclusively give a crossover, or it will take resistance from here and then start to go down again. Something like this. So let's see. And if you go back in history and see whether would we have been able to time it as per the MACD historically, then I don't think you will go wrong, because these are very clear signs. This is your buying point at this point of time. See, at this bottom, this is your buying. Somewhere here it was a slightly confusing signal, but then very conclusively a sell here, then a buy here, then very conclusive, a buy here and a sell here. And yeah, I think it works. So all you have to do is pick a chart, go to the monthly chart, and see if you can time your peaks and troughs by looking at the MACD. Yeah.
Okay.
The other thing that I want to tell you, the other thing I want to talk about is now this is the other important thing. So let's say I am in Titagarh wagons. I am in this company called Titagarh. So I have to now figure out. So let's say I delete these lines here. Sorry, this is slightly longer discussion. I think we're already 1.5 hours, so just bear with me towards the end. So if you look at the chart of Titagarh, and I'm looking all the way from 2008 here. So let me mark this. So this is 2008. This is 2015. This is 2018, and this is 2023. Right. So we have 1, 2, 3, and 4. Yeah. So I'm numbering this because this level of 187 is a very important level for me. The stock has 3 times in the past tried to break this level, right? And this we'll talk about more in the next session also, because this is related to all-time high breakouts. But because we are looking at MACD right now, so let's look at the kind of signal that the stock is giving you. And this is related to the moving average convergence divergence thing that I'm talking about. So see, what happens is that when a stock starts to go up, and I will just clear this slightly. So when a stock starts to go up, right, this is the upward journey of that company, and you think that the stock is in the momentum, right? So one thing you can definitely say that the stock is in momentum, and what you can also say is that the stock is an uptrend, right? But it is very important for me to figure out whether the stock will break out of this level, or it will take resistance at this level and start to go down, right? And that question came to me very recently when I was looking at this stock at 187 odd levels. And this is a perfect example, so please pay some attention here. So the stock has been in an uptrend all the way from 2013 14 odd levels to 2015 17. So this is like a 3-year time frame I'm talking about. It has sort of come very closer to its all-time high, which is around the 187 level. Now, uh, what is happening here is that I need to figure out whether there is strength, there is buying strength or not. So what happens is, initially here you will see a lot of buying strength. So as you can see all through this time, there's a lot of buying at these levels, But as the stock approaches the all-time high, we are seeing that the buying has come down. So we are getting into the red zone because the 12th EMA is now below the 26th EMA, which means the trend has slowed down. So the buying intensity has come down. And so when I did manage to touch the all-time high, there was no buying uh, intensity, right? So the buying intensity has reduced. The buying momentum had reduced. And so it was very difficult to break the all-time high. See, and so obviously it took resistance and then went back down here. So this is important because I need to decide whether I need to keep buying all through this time. Should I keep buying at this level, or should I wait for a breakout, right? Which is why this conversation is very important. Typically, when you in an uptrend, when the stock keeps going up, the buying intensity keeps reducing as you reach upper and upper, right? And similarly, when the stock is correcting, the selling intensity reduces as you keep down and down. So it is making a lower low, and the selling intensity is coming down. So that's convergence divergence. So your stock is coming down, but the selling pressure. So but the histogram slope is uh, in the opposite direction, right? And that's your convergence and divergence. So this is your convergence. This is your convergence, and this is your divergence. So what we are seeing here, But we're very seeing conclusive here is that as the stock makes lower low, the selling pressure is reducing, and hence that's your point for a crossover. And then from here, there is a reversal. And at this point of time, I am not seeing enough strength, enough buying strength for me to keep adding. And so I need to decide whether I need to sell at this point of time and get out. Whereas very recently, when the stock gave me a breakout, there was a hell lot of buying intensity. So look at this buying intensity right here. Super bullish on the stock. The stock was approaching its all-time high, but there was very high buying intensity, and that gave me the strength and the conviction to keep buying more. And we saw a breakout. We saw an all-time high breakout, and then from those levels, although the stock has gone almost 80-90% up. So what you're seeing here is 90% returns in a matter of 6 months. This is where MACD becomes very important. The convergence divergence concept is very important here, because as your stock keeps going up, the buying intensity reduces, and maybe there is an onset of selling intensity. So you need to be very cognizant of that, because then your reversal will start. So this reversal will start, and you need to be careful to make an exit. Whereas in this case, when the stock this time reached its all-time high, there was no reduction in selling buying intensity. There was, in fact, the buying intensity was even high. We were seeing that the histograms were getting bigger and bigger and bigger and bigger. And so I was very sure about a breakout. And so I stayed invested. In fact, I added more during this time, and it just kept going up and up. So that's where my convergence divergence concept comes into the picture, right? I will talk about another company which is very similar, not very similar. The company not similar, but the concept is
similar.
But
in that conclusion means now that is not a good time to invest, right? Because it's already done.
So Titagarh, it's not the best time to invest. In fact, Titagarh is very close to its high levels. I would still not give an exit here because, okay, so let me just go back to Titagarh. Because I am yet to see a conclusive crossover in the MACD, right? So as you can see here, the most recent histogram was even bigger. So unless I see a smaller histogram here and the trend reducing, and then I will also see a point where my MACD tops out and starts going down, and then it gives me a crossover. So obviously not a time to sell, of course, but not a time to buy also.
Exactly. Correct.
Yeah. This is where you just keep holding the stock and you are now waiting for your optimum time to exit, right? So it's not a time to sell, but not a time to buy also. Right. So I'll now go to Gravita. And let's see what is happening here. So yeah, what we're seeing here is I'll tell you what happens. This is what is happening. So as the stock starts making a higher high, so the stock is making a higher high, my buying pressure is coming down, my buying intensity is coming down, because my histograms are getting smaller and smaller, and obviously there is a resistance line also. So in my view, the stock will take resistance and start going down from here. And so I'm watchful. I am yet to see a crossover in terms of my max, but it did tell me that this is a good time to buy Gravita India, right? So almost at the bottom, this was a chance for me to buy, and then ride all the way from here to here. I'm yet to see a sell, but again, not a price to buy, right? So that's the last concept. In the next session, I'm going to talk about how we can use Heiken Ashis. So there is this chart pattern called Heiken Ashi. So I'll just give a small glimpse here. This is Heiken Ashi. And the beauty about Heiken Ashi is that it gives you a very clear indication of the uptrend and the downtrend. So look at this here. This is your downtrend phase. the red bars, uptrend phase, the downtrend phase, the uptrend phase, the downtrend phase, the uptrend phase, right? So Heikin-Ashi chart gives you very clear indication of an uptrend and downtrend. And in the next session, we will see how we can mix Heikin-Ashi with MACD to again identify trends and make at least 50% returns. At least 50% returns in a long-term trend, right? So that's what we will do. We'll do this in the next session. I think today we've already crossed our limit, I think. So yeah, I mean, we'll do that next, and then we'll also discuss breakouts in the next session in a more detailed manner. We've touched on breakouts here and there, but proper reversal and breakouts we'll do in the next session, along with Heikin-Ashi and NMC. Right, so that's it. Any questions here, Jeevan sir, or I'll end the session?
No, you can end the session. Probably after this, immediately we will connect. But this session, yeah, you can connect.